Welcome back to another episode of the Anatomy of the Trade. Today we're gonna go through a couple of intraday trades that I've done just recently over last week. Obviously, very interesting reversal. We've talked about this in the last session in our market update. So let's just see how I traded that. And a quick announcement again, we're still in the tape reading course. We are starting today with David Weis, who is just an unbelievable tape reader, one of the best in the world, and I would highly, highly recommend attending those sessions just because David does not do this that often or at all. So he usually does a lot of private sessions. So we are just very, very lucky that he agreed to do that, and we're looking forward to today's start of his series. Okay, so here is our first trade. This is on the 29th. And ironically, during this period right here, this is where we were recording last week our anatomy of the trade. And our call was that we're experiencing a change of behavior that should lead to some stopping action on the daily, possible reversal, possible trading range. And we kind of went into a downsloping trading range if you would look at the structure of it. And then we came out of this with the bullish bias. So again, just maybe like calling this a little bit earlier in terms of the bias and having some mistakes there. So I'll talk about that. But on that particular day, continuation was still bullish. I mean, as we look at the next attempts to rally, they are higher highs. Next attempts to push the market down, higher lows. And then we have an slightly upsloping structure here that we are, labeling with phases and kind of very obvious change of behavior, secondary test, phase A, test in B, test in B, and then this bar is very telling. It's almost like was a hint that right now, after that, after we have some kind of testing, this confirms phase C just because this is the second point of fear, and from here we just need to be good on execution. So coming in into this position in a small, out of the small apex on the diminished supply signature, and then we're just holding. We're not really that concerned about this action, just because every time there is some supply that's coming in, there is nothing's going on the reactions. So holding through that, the really good rally above the previous high, confirming on the increased demand signature that this is a true breakout, not a false breakout. Very flat reaction after that. Again, supply is increasing, but nothing is going on, so we just continue to hold on. Another wave up, but on this wave up, we're seeing a little bit of a deterioration of the momentum. So you kind of, could see this just a little bit, and demand has diminished a little bit as well. So we know that there's going to be, some pushers up after that, but probably on the next pushes, we should be a little bit more cautious and start moving our stop loss. So next wave up, again, momentum is going down even more. Next one, even more. So right here, we just plan, the staircase stop loss movement, and it gets us out on this bar right here. Now what happens next? One more bar to the upside, then the bar that reverses it, and then we go into a change of behavior. So in retrospect, I mean, not such a bad exit, considering that we're probably just one bar away from the actual climactic peak. So I kind of liked how I used the momentum characteristics on the way up, volume characteristics on the way up, where demand is diminishing. So not really waiting for a change of behavior bar. And I think that if I would have, multiple units as a position here, which by the way could have been added here, could have been added here. But if you have multiple units, this would be a really good exit, and then the change of behavior bar would be a good exit. And then the next exit is on the way down on the change of behavior reaction itself. But overall, I would say, Franz, that this is probably a good trade.
Yes, Roman, I would agree. If we could just take a second and go back through your analysis, the phase C spring and test, I really like the way you pointed out that last bar, where kind of supply comes in and it's exhausted. And after that, you knew you could just read it that it's time for the reversal after a successful test, which we see. So I really like that analysis, and I really liked your point of entry following that.
Let me bring something to this discussion. Okay, so I think that our audience is very devoted, to this particular series, so we want to give you something special. Okay, well, look at this bar and think about, like this whole area here, up to that bar. Think about supply, and that supply has to be in strong hands before the price starts to move up. Why would supply be, has to be in strong hands before the price moves? Well, because if supply is available, the price is not going to move up, or it's going to either consolidate or go down. So we see how consumption and absorption of the supply has happened here at the beginning of the session. And that's why we had our call last week that we're going to have a move up from here. But still, let's just let's say that a measurement of supply is measured in some kind of units, and we have to collect 100 units before the price starts moving in some kind of uptrend. Well, as we, let's say, consuming maybe like 80 units of supply in this area, and then we go through the area where supply is diminishing, and then suddenly there is increase of the supply. So maybe the rest of the units that were needed to be absorbed before the move have happened here. And then after that, once we get to our overall, absorption of the supply, that's the time, and that's when we can start moving up. So a little bit theoretical as a concept, but hopefully, that kind of like rings a bell in for some of you, and as to what we're looking for before the actual move starts. Okay, well, let's go through the post analysis. So, Franz, what do you think? Bias?
Yep.
Yes. Timing?
Timing, excellent. Yep.
Character?
Yes.
Yes. Point of entry?
Yes.
Stop loss? Yes. Add-ons? I wasn't planning to have any add-ons, but I'm just showing where potentially you could have, added to the position there. So I'm just going to be non-applicable here. Exit, right. I think, could have been approved by one bar, but I think it's pretty decent, so probably yes.
Yeah, I would say yes too. I really like when you're talking about momentum and using that as your signal for your exit, I think people are familiar with the shortening of the thrust concept, and you can really see that as prices going up, and really good call. So yeah, I definitely give you a yes on the exit and 100 score. So wow, okay. You get the gold star.
Yeah, finally. So in the comments and lessons, I would say still probably like think of add-ons. Because once you have this opportunity, you want to be a pig. So that's not my expression. This is from George Soros, from his famous trade in 1992 on the British pound. Because when you are correct and you see how the trend is unfolding, why not to add at this spot? But the intention was not to have the add-ons. The intention was just go through the trade and execute it correctly. But that's probably the only thing, Franz, that I would be thinking here.
Agreed.
All right. Okay. Well, from a perfect trade, let's go to imperfect trade. So this is what happens, down the line. This is Monday, November 2nd. So a day before the U.S. election. So I'm already in the bullish bias mode, as I'm kind of, you know, looking for some bottoming um, of the index. As you know, I call it the change of behavior. Uh, I'm looking for the price finally to reverse and travel up. So with this bullish bias, I think this was the mistake here. As I'm entering this position at the beginning of the day, I'm expecting a trending day up. So I'm expecting that the reversal will happen here. And that was kind of like the biggest analytical mistake here. And I'm really busy in the morning, going through my usual business stuff. So I'm not looking at this asset, at this trade. So just kind of like going through the trade with the stop loss, and it just hits me where it hits me. So obviously, not the best way to trade, period. And especially if you're looking for the bottom, then you definitely need to figure out how you could stay there and be a little bit aggressive on the exit if it doesn't happen your way. So, what were some of the indications, right? So now in retrospect, what were the indications that I could have closed this position earlier, if I was available to do so? Well, first of all, the breakout itself was not that convincing. And I think this was probably the biggest mistake. On the diminishing demand signature, we are breaking out, but it's not the greatest breakout in terms of how the price goes through the resistance level. Then on the next move up, a little bit of the climactic move up. Um, so it has climactic characteristics. This bar right here has the increased supply signature and increased result to the downside. So it shows weakness. If that was not enough, after this local sprain, the next rally creates a lower high and also has this climactic character to it right here, which is being, demand is being um, reversed by the supply that's coming in right away. And then again, we have kind of like the same supply bar. So I think that this is a really good exit in this case. This was a really good point of entry, to the downside, to the failure, at least to this level. So there were quite a few, mistakes here. But again, I can't do anything if I'm not there, if I'm not just going through this trade. So, Franz, why don't we just go through the post analysis here, because this is going to be interesting. So the bias is probably no, right?
I agree. Yeah.
Timing, I would say that timing, but just for this trade was okay. I mean, like we are entering at the time where the price starts to move. So let's just put yes. Character, no. Point of entry, yes. Stop loss. I mean, there was a stop loss. We probably should have moved the stop loss somewhere here and get out a little bit earlier. So let's just put maybe still yes, non-applicable, and exit. Yeah, I don't know. I mean, like exit in terms of the stop loss exit was okay, just because we're not allowing position, to go into, deep red. But at the same time, obviously, could have been better. So probably no.
Sure. Well, I'd give you a yes, actually, because you followed your rules. I mean, you put a stop loss.
And that's what
Not
I'm
having a
talking about
stop
here.
loss
Yeah.
not having a stop loss would be, to me, a no. And if you're away, your stop loss, it saves you from, from a considerable, hurt to your pocketbook. So, yeah. So what do we have here? We've got
So we have 3 yeses, 4 yeses, and 2 nos.
So
So
4,
that's
6,
about
66.
67%.
Yeah.
Okay. So obviously be available for the trade. That's number one. Secondly, I think analysis of the breakout would help here, just to reverse this call. Thirdly, I was coming in with the bullish bias. I was coming in with the bias that this is the day where we're gonna actually have the low. So this was on the second. When was the actual low? It was on the second. Yeah, this was the actual low right here. So I'm just a little bit ahead, in terms of trying to figure out where the low is. So what I want to say here is, I mean, it's okay to come in with the predetermined bias, but look for confirmations.
Mm-hmm.
And don't be stubborn, on this trade. So, Franz, what do you think? What else?
Yeah, I mean, the bias is the whole issue, and that's I think you've already addressed that.
Yeah, so needed to wait into like the middle of the day for that low to occur. Okay, well, obviously not the greatest trade. The second,
Quick question for you, Roman. One of the things that you've mentioned in the past is the ability to determine the bias can happen as early as phase A.
yeah,
And in this case, could you just kind of expand on that a little bit? I mean,
yeah,
if
we
it's
had
something you
this
wanted.
type of structure on the intraday. So the bias, as I determined it at that time last Thursday, was here. So this told me, and there is a bunch of things here. You guys have to go to the previous video to kind of like, go through this. This showed the change of behavior. Now, a change of behavior could be on the way into the trading range and then on the way out. So, but this change of behavior gives us an early indication of a possible bias, which was bullish. And then I'm operating all this time throughout this whole structure from this bias. And obviously what I'm doing is I'm kind of limiting myself to only a bullish bias. And I think that's kind of the mistake that I'm making here. Again, earlier identification of bias and then going through the trading range, just trying to figure out, the trades that are going up, going up, going up, and from here are some of the mistakes that occur. Okay, well, let's look at the second trade on the same day. That actually picked up the actual low. I mean, this was the actual low. So we're getting into the position relatively early. Franz, I had a discussion about this trade yesterday. So a very interesting question was asked. What the heck are you doing here? Like, in terms of like, how do you even, recognize that this is a buy signal? So I wonder what you think of this point of entry. I mean, like, obviously in retrospect and hindsight, not in real life, what do we see here once we see, what happens afterwards? How is this point of entry justified?
Well, we want to see some sort of a selling climax.
Mm-hmm.
And that can present itself in a number of different ways. Sometimes it's on, very, very high volume that indicates, just a large change of supply and demand. And sometimes it can express itself as it does here in a couple of things. First of all, a shortening of the thrust, as we see the effort to push the price down, expanding, bar after bar after bar, and we don't see a whole lot of downside progress. And this is after we've been in this extended, since, basically the opening of the market. We've been in this extended downturn. So I think what you're looking at here, you've already in your mind, you're thinking, well, this thing's going to turn around and go up at some point. And you're just seeing the signs that the tape is telling you that the selling is about to be done. The supply is all of the supply that's out there is about to be, presented. And then we've got a very short little trading range here, a very short little accumulation period that I think you read great. And
still a little bit earlier here in phase B of that smaller trading range. So it's interesting how that mistake of being early was the correct bias. Still, even in a smaller trading range, is showing up. But thank God it was a smaller trading range. Okay, well, the idea of what Franz is describing is correct. It's kind of like trying to find the bottom with specific characteristics where selling is deteriorating and buying is starting to emerge. So what do we see here? Well, if we go through the whole day, all of the reactions, look at the texture of these moves, right? So what do we see as, these reactions unfold? We're seeing how momentum is starting to deteriorate. We're seeing how the downward spread is also decreasing. We're seeing how the overall volume signature decreased and supply decreased as well. And then we're looking for the spot where we're going to have some kind of increase in the volume signature, some kind of local acceleration in the conditions that are going to be oversold and that are going to show that selling is diminishing. And that was the call. And whenever we have the diminished exhaustion characteristics of the supply, we might actually have the lowest low as our selling climax, and then after that we could, have a move potential up. Now, so very counterintuitive as to how this trade was taken, under what conditions. But this area right here itself was a proof that we are probably have experienced the bottom. Why? Well, demand is coming in, and we still have some supply. And so I like this uneven level of different reactions that we have that should suggest that supply is coming in, but every time there is a recovery out of that. So every time the price pushed down, we're seeing how it's being pushed up, especially into the close. So the close was very telling at this point. Well, this was an intraday trade. There are some other positions that were directed to this latest rally. So my goal was just to close the position before we start experiencing some kind of reaction. So on the close here, very simple demand deterioration above the previous high. We're seeing how the momentum is starting to diminish. So I want to get out before I have some kind of more meaningful reaction into the close of the session. So that was kind of like enough for me at that point. And I actually think that the exit was relatively good based on, this swing that we're seeing here. Franz?
Yeah, agree. I really like your analysis. I mean, I'm just sitting here listening. So
All right.
looks
Well,
good.
let's go through the post analysis then. Bias, definitely yes. Timing, definitely yes. Character, definitely yes. Point of entry, yes. Stop loss, yes. Add-ons, again, I wasn't planning to have any add-ons and exit. Yeah, I would say yes. I mean, like, that's probably the only question that I would have here. But again, the goal was not to go carrying anything overnight, not to go into the last 30 minutes, with any type of meaningful reaction. So I would say yes as well. But Franz, something, is there anything that we could maybe point of entry again, phase B entry?
On a positive note, I think the use of momentum in the previous 100, this is 2 100s and 2 out of 3, Ramon. You're up there with Ted Williams in your batting average now. But in both cases, the momentum is a signal to in the previous trade to get out, and in this trade and PO in the second edition, it's a place to get in, because momentum, in both cases was starting to wane, and showed you that it's time for a change in direction in the overall swing. So on a positive note, definitely I'm putting it in my book to pay very close attention to momentum.
Yes, absolutely.
Among other things.
All right. Well, with this is it for today's episode of the Anatomy of the Trade. Leave us your comments, guys, as usual, and also leave some suggestions as to what else you would like us to go through. Obviously, anything trade related, this is what we want to look at. Franz, thank you so much. Good episodes, and we'll see you next week.
Thanks, Ramon. Likewise.